Here are additional FAQs on the stock market. 81. What is the difference between an ETF and a mutual fund? ETFs are traded on the stock exchange like individual stocks, and their prices fluctuate throughout the day. Mutual funds are purchased directly from the fund provider and priced at the end of the trading day. 82. What is a dividend yield? The dividend yield is a financial ratio that shows how much income an investor can expect to receive from dividends in relation to the stock price. It's calculated by dividing the annual dividend by the stock price. 83. What is a stock's book value? Book value is the value of a company's assets minus its liabilities. It represents the net worth of a company, and it can be used to evaluate whether a stock is under or overvalued. 84. What is the role of a financial analyst in the stock market? A financial analyst evaluates investment opportunities by analyzing financial data, market trends, and economic conditions to help investors make informed decisions. 85. What are stock warrants and options? Stock warrants give the holder the right to buy shares at a specific price before expiration, while options provide the right, but not the obligation, to buy or sell shares at a predetermined price. 86. What is a stock buyback, repurchase? A stock buyback occurs when a company repurchases its own shares from the open market, which can reduce the number of shares in circulation and increase earnings per share, EPS. 87. What is a price-to-book ratio, PB ratio? The PB ratio compares a company's market value, price, to its book value, net assets. A PB ratio of less than 1 suggests that a stock may be undervalued. 88. What is a stock's volatility? Volatility measures how much the price of a stock fluctuates over time. High volatility means a stock's price can change dramatically in a short period, increasing risk and potential reward. 89. What is the difference between common and preferred stock? Common stock represents ownership in a company, giving shareholders voting rights. Preferred stock usually doesn't provide voting rights, but offers fixed dividends and higher claim on assets in case of liquidation. 90. What is the difference between a stockbroker and a financial planner? A stockbroker buys and sells securities on behalf of clients, while a financial planner provides comprehensive financial advice, including retirement, tax, and estate planning. 91. What are foreign stocks? Foreign stocks refer to shares in companies that are based outside of your home country. These can be traded on foreign exchanges or through American depository receipts, ADRs, in U.S. markets. 92. What is a stock index fund? A stock index fund is a mutual fund or ETF that attempts to replicate the performance of a specific stock market index, like the S&P 500, by holding the same stocks in similar proportions. 93. What are international stocks? International stocks are shares in companies based outside your home country. They offer investors access to global markets, but come with risks such as currency fluctuations and political instability. 94. What is the role of the Federal Reserve in the stock market? The Federal Reserve influences stock markets by setting interest rates, conducting open market operations, and adjusting monetary policy. These actions can affect investor sentiment and market liquidity. 95. What is a speculative stock? Speculative stocks are high-risk investments that have the potential for substantial returns, but they often come with greater uncertainty and volatility, such as emerging market stocks or small-cap stocks. 96. What is a stock market crash? A stock market crash is a sudden, dramatic drop in stock prices across a significant portion of the market, often triggered by economic events, panic selling, or financial crises. 97. What is the impact of inflation on the stock market? Inflation can erode purchasing power and decrease the real value of earnings. In times of high inflation, interest rates may rise, which can negatively affect stock prices, especially in growth sectors. 98. What is the role of institutional investors in the stock market? Institutional investors, such as pension funds, mutual funds, and insurance companies, manage large sums of money and have significant influence on stock prices and market liquidity due to their size and investment strategies. 99. What is a growth stock versus a dividend stock? Growth stocks are companies expected to grow their earnings at an above-average rate, often reinvesting profits back into the business. Dividend stocks pay out a portion of profits as dividends, providing steady income. 100. What is the impact of interest rates on the stock market? Rising interest rates typically reduce the attractiveness of stocks, as they increase borrowing costs for companies and reduce consumer spending. Conversely, lower interest rates can stimulate economic growth and boost stock prices.